This video is going to be for newbies to property investing. If you're considering buying an investment property, let's have a chat in today's video and break down some of the things you need to look out for when making your first investment property purchase. Now, my name's Luke. I talk all things real estate, renovating, and financial freedom on the channel. If you're interested in buying a property in the Southeast Queensland market, then head over to purposeproperty.com.au to book in a free strategy session with myself. We'll sit down, have a chat about your situation, what you're looking to achieve over the short and the long term, and break down our process as buyers agents here in the greater Brisbane market and how we can potentially help you secure your own home or an investment property. So the first cab off the rank, the first thing on today's list when it comes to buying an investment property is understanding your finances. Before you can even go on realestate.com or Domain or engage a buyer's agent, you need to understand exactly what your borrowing capacity is, because this will determine your ability to purchase an asset. You might have all the willpower and all the want to buy an investment property and to buy your first investment, but without the ability to access capital, you're very unlikely to be able to purchase an asset. So go have a chat and a sit down with a broker or a bank. You need to share with them your pay slips, your identification, any other income that you might have from a side hustle that could fall into your serviceability. You then want to share with them your expense list and break that down into categories. Based on all of that information, the broker or bank will be able to calculate your serviceability. What that means is they're going to be able to tell you how much money you can get access to buy an investment property. And we deal with this every day of the week with our clients. One of the first things we ask for as buyer's agents is, can you share an email or a copy of your approval from your bank and the maximum borrowing capacity that you have? For example, some recent clients that came to us had an $800,000 borrowing capacity. Now, based on their situation and their circumstances, they might not want to actually use 800 grand of capacity. They might want to buy a $650,000 or a $700,000 property. And that leads us into step number 2. So now you've got the funds available, let's do some research around what you should actually buy. Now, in this client's example, they were looking for a townhouse or an apartment because they wanted a higher level of cash flow. Now, for me as an individual investor, I tend to like house and land. Not house and land packages, but established house and land in towards inner city locations. That's where I built my property portfolio in the blue chip inner rings of Brisbane, and then expanded to northern New South Wales in buying an apartment block. So for you, at buying your first investment property, look at your borrowing capacity, say 800 grand, and then you need to research what markets you might be able to put your money in. Now, I'm a little bit biased, of course, because I'm a Brisbane-based property investor and I run a buyer's agency that helps people buy property here in Southeast Queensland. But I'm totally open and honest that you can buy at an 800K price point across Australia. You might want to look at Perth. You might want to look at Adelaide. You might want to look at Hobart, Brisbane, Northern Queensland, Northern New South Wales. There's a lot of options at that 800K price point. So when you're doing the research, it's important to assess the options that are available to you at your given price point. Now we've got a fundamental understanding of markets across Australia and our borrowing capacity, it's time to narrow in on your strategy. A lot of Australians really get stuck after buying their first investment property. They might buy a lemon, or they might buy an asset in the wrong location, or they might buy an asset that has no value add opportunity. So you need to look at the strategy for this specific property purchase and your larger portfolio. So how does this first property help you grow a larger portfolio if that's what you're looking to do? So for first-time investors who are looking to purchase their first investment property, let's look at the strategy. For most Australians, you're going to want something that's tenant ready or close to tenant ready, maybe with some cosmetic value add potential in the next 5 years. So something that might be a little bit run down, but is more than livable at this point in time. Now, using an 800K budget, let's say you want to buy a house for $650,000. And you're going to want to potentially spend $10,000 or $15,000 down the track, adding value in, say, 2 to 3 years' time. You then need to assess how this property is going to get you from your first to your second to your third investment property and so on. So buying this $650,000 asset, You could go out to a new house and land package and buy a property on 300 square meters because you're buying a cookie cutter property with another 1,000 homes in the same area with no ability to add value to that home. If it were me and my money, I'd be looking for a brick home on 600 square meters with a reasonable yield and the ability to do a light cosmetic renovation in the future. This is going to suit most first-time property investors because of their risk profile. You don't want to take on too much of a project by doing a full-scale renovation, and also you don't want to buy too new a property with no ability to add value. So buying a property which has a 15 to 30K renovation budget in 3 years' time, that's say brick and tile or is a nice high-set timber-clad home, with that ability to add value is critical. So now we understand our capacity, we understand our markets, and we understand the overarching and individual strategy for the property. It's time to get down to asset selection. You need to go out and start vetting the right opportunities. This means boots on the ground. There's a lot of desktop research you can do these days as well. You can look at a whole host of data sets, Google Maps, CoreLogic, ABS, SQM. You go into Street View and have a look at the properties around on the ground. But also physically inspecting and understanding the local area is also critical as well from that qualitative side. So then narrow down the opportunities at your price point and start negotiating on assets. Now, in congruence with making the right asset selection, you should also be running detailed numbers on your potential property purchase. This means running a balance sheet and a profit and loss, looking at the asset, the liability, the equity you're going to have in that property, and looking at the forecast income and expenses. I have a free investment property calculator on my website that you can download, punch in your own numbers for your own potential property purchase, and there's even a follow-along video with that investment property calculator to bring you guys value and to allow you to crunch your own numbers on a potential investment property purchase. So in that calculator, you could mess around with rent at say $500 a week, $550 or $600 a week, and look at a low, medium, and a high scenario in terms of the rental income. This will essentially give you sensitivity analysis. And for first-time investors, it's important to understand the worst-case scenarios. What happens if we buy this property for $650K and it rents for worst-case scenario $500 per week? It's good to understand that scenario and how that might affect your day-to-day expenses, what the outflow might look like. If you're negatively geared, you might have to spend $50 a week to prop up that investment property. So the calculation of the numbers and the asset selection go hand in hand. Finally, it's time to manage the risk. So once you've got your assets selected and you've crunched the numbers and you've negotiated that deal, now it comes down to risk management. This means making sure you've got the right insurances in place, you've chatted to your lawyers, you've chatted with your building and pest inspector, you've chatted with your property manager, you've chatted with your accountant, and you've got the team around you to help you minimize risk in building the property portfolio. You can also leverage off free resources like YouTube videos, property forums, and make sure you're building your knowledge. This is also going to help reduce the risk as you become more knowledgeable. Now, a buyer's agent like myself can bring a lot of value by walking you through this process end to end. We offer an end-to-end buyer's agency service here in Southeast Queensland, helping people all the way from the initial buying brief through the asset selection, all the way through till settlement and handing over the keys to a property manager. Now, I hope today's video has given you a clear idea of the steps involved if you're a first-time investor and looking to purchase your first investment property. If you want to see the process of working with myself as a buyer's agent, click this video over here. Otherwise, drop a like on this video and thanks for sticking around. I'll see you in the next one. Peace.